Hi and welcome to DNB Carnegie. My name is Mark Salmrud. I'm an analyst here at the bank. So we're here today to talk about fingerprint cards or FPC, and the reason is our reinitiation. We have a fair value range of 30 to 40 Swedish krona. FPC develops and sells fingerprint sensors. It has undergone dramatic transformation over the past 1 to 2 years and has come out on the other side as a smaller but more agile and profitable company. We will cover 3 points today. Firstly, FPC will be moving up the value chain as it increases the share of system sales. Conversion of customers from sensor only to system sales is a key sales driver ahead. Its turnkey solution, AllKey, have ASPs of 3 times that of sensor only. We expect 50% conversion rate by 2030 and 29% sales CAGR in 2025 to 2030. Secondly, with dramatically lower cost and growing sales, we expect cash flow positivity towards the end of next year, 2026. Thirdly, there's optionality from the move towards the identity cloud, which will drive software sales. So going into details, we will start with an overview of the pillars in the second phase of the transition plan, where growth is accelerated. The pillars are asset monetization, growth of the core business, growth of new business, and business modernization. Starting with asset monetization. So FPC has spent a considerable amount of money in product development over the past decade. And even though it has phased out some operations, it still has the IP portfolio. This can be monetized and will fund ongoing operations as well as growth initiatives. So far this year, it has raised 66 million Swedish krona, and there's plenty more to come, we think. This is an important funding source. Moving on to AllKey and growth of the core business. AllKey is FPC's turnkey system. Now, why would customers choose a current turnkey system? Well, it's a plug-and-play solution which does not require an engineering team to put the modules together, and it lowers the overall cost for customers. The underlying biometric technology market grows by around 20% per year. ASP for AllKey is 3 times that of sensor only, and we see conversion of customers as a key sales growth driver in the coming 5 years. AllKey also opens up a new market and can also be sold via distributors. New growth is mainly growth in iris and software. Through the partnership with Anonybit and the product FPC Identity Fabrics, a product which is integrated into Microsoft Entra, which is their identity and access management system, FPC gets access to the identity cloud. We see huge potential in this, and given that the rising cyber threat increases the focus on both authentication and biometrics. Timing here is uncertain, because this is a market that, sales taps into a new, undeveloped market, and hence timing is uncertain. Our forecasts reflect high single-digit share software sales in 5 years. Now, with gradually increasing share system sales, we expect that roughly 2/3 of sales will be system sales in 2030. And this gives close to 30% sales CAGR in the coming 5 years. Operating costs have decreased dramatically and will decrease further. Personnel has decreased, but it is also using AI in its processes to increase efficiency. We do expect positive cash flow at the end of next year, 2026, and we see 2027 as the first positive EBITDA year. Finally, given that cash flow positivity is not far off, and given further monetization deals, we see no need for further capital raises. There is more in our full note, which can be found using the link in the description below. But in summary, FPC has undergone a dramatic transformation. We expect to move up the value chain to drive close to 30% sales CAGR in the coming 5 years. And we expect cash flow positivity at the end of 2026. Exciting times. Thank you.